Hey, what's up guys, welcome to another video. This video is going to be a little different from our usual stock videos because this company is not yet listed, but will be listed later on this month. Rua Bioscience is the first NZX IPO this year, and the second cannabis company to be listed after Cannasouth was listed last year in June. With the growing cannabis culture around the world, with medical cannabis being legal in over 40 countries across all major regions, while growing at this rapid rate, does this New Zealand company have a viable business? Let's jump right in and see if the stock is worth your investment or not. Rua Bioscience is a relatively young company started in 2017 that has entered the medical cannabis sector while the sector is still at its infant stage, and was the first private company in New Zealand to receive a license to cultivate cannabis for research purposes. Nevertheless, Rua is still a pre-revenue company that is loss-making and relies on investor funding. The company still expects to be a loss-making company for at least the next 2 years, so investing in Rua at the moment is a speculation. But in this video, we will cover a little bit about the company, some of the strong prospects of the company, and some of the risks that you might want to watch out for before you decide to invest in it or not. Let's begin with what the company is offering in this IPO. So, the company is offering 40 million shares, which accounts to around 28% stake in the company, at a price of 50 cents per share. The distribution of these 40 million shares will be split into two. 10 million shares will be allocated for priority investors, and the remaining 30 million will be allocated to institutional investors and retail investors like us. Given that the IPO is successful, the company would have raised $20 million. Now, let's take a look at where the company is currently positioned, what it has achieved so far in terms of product to export partnerships with Germany, and then we can take a look at their future prospects and growth potentials. Rua Bioscience is New Zealand's first company to be granted a license to prepare and use medical cannabis, and the first to legally import high THC seeds. Rua has invested approximately $6 million to construct two purpose-built commercial-scale facilities, a controlled cultivation facility in Ruatoria, and an extraction and manufacturing facility in Gisborne. Currently, the Ruatoria facility has an estimated current capacity of 160 kgs of dried flower per year. However, Rua's cultivation partner, MedBloom, is planning to build a controlled greenhouse facility with an estimated capacity of 870 kgs per year in 2021. These two facilities are both currently operational, but in order to viably produce and sell medical cannabis products, the Gisborne facility must first obtain a GMP certification by MedSafe, who is responsible for the regulation of therapeutic products in New Zealand. Rua has already submitted the relevant documentation for this audit in July 2020, and an audit date is already set with MedSafe for early November 2020. Rua expects to be certified for GMP by no later than Q1 of 2021. The facility has been designed in conjunction with the EU GMP experts in Germany and Spain to ensure that the products will consistently conform to the highest global quality standards. This brings us to Rua's major plus point. The foundation of the company seems to be in place, with obtaining/pending licenses and operational facilities in place, but what about sales? Unlike its biggest New Zealand competitor company, Cannasouth, which is currently valued at $105 million, Rua has executed a binding sales agreement with Nimbus, a fully licensed importer and distributor focused on medical cannabis products in Germany. But the price and how much Rua will be able to export cannabis flowers to Nimbus is unknown. So we looked into the price that the German government pays for wholesale of cannabis flowers. And at the end of 2019, Germany has set the wholesale medical cannabis price at 2.3 euros per gram, which at the current cultivation capacity of 160 kgs would be 368,000 euros, and potentially with the expansion of capacity in 2021 to 870 kgs, fetching around 2 million euros. Although this isn't very much, this is all a part of their short-term plan to bring in some revenue, which should help Rua reach their long-term goal of developing their own product with less funding.
As with any IPO and companies, there will always be risks. Here are some of the risks for this company. Rua Bioscience has stated that there will be a loss-making business for at least the next 2 years. However, if we look at how cannabis companies in the US and Canada have done, all of these companies on the screen have reported an operating loss for the last 4 consecutive years. So, as Rua Bioscience is still in its very early stages of this game, it may have a very long road ahead before they see any profit. In the past year, Rua has burned through $3 million. Although the IPO should give them $20 million, they will be spending more money to grow faster, and it is very possible they may need to raise more money in the future, which would dilute your shares and affect the share price. For example, last year, Cannasouth completed their $10 million IPO at 50 cents a share, but earlier this year, they decided to do a capital raise at 38 cents per share, which is cheaper than their IPO price. The price of cannabis can also change. We mentioned earlier that the German government is buying at a wholesale price on 2.3 euros per gram. However, with the number of wholesalers rapidly increasing, the wholesale price is likely to fall. And according to this article right now, it now appears the price is on course to hit about 1.87 euros per gram. So by the time Rua actually produces the cannabis flowers to sell, the price may be lower than it currently is. Moving on to the referendum. Now for this, some of you may say Rua is a medical cannabis company and has no plans to enter the recreational market. Therefore, the results of the referendum has no effect on the company. But a lot of investors are investing in these companies in the hopes of them changing their mind and entering the recreational sector as well. Whether this is logical or not, emotions of investors play a big role in stock price fluctuations. So if the referendum comes out negative, those investors who invested in the hopes of backing the recreational sector may pull out. Also, the public's perception of the plant does matter. Many people simply just have a bad perception of cannabis. If using cannabis product was socially acceptable by everyone, like taking a Panadol, the demand for using cannabis would be a whole lot different. And finally, the regulatory risks. The medicinal cannabis market is in the early stages of legalization in New Zealand and globally. There is a risk that legislative and regulatory changes or delays in New Zealand or key export markets could disrupt Rua's business plans and materially impact Rua's competitive strength in the global market. Also, until New Zealand provides subsidy for cannabis-based medicines, the average person won't be able to afford these products.
So, as with any new startup, there will always be risks. But you have to ask yourself, do the risks outweigh the potential growth? The medical cannabis retail market is forecasted to be at around a $60 billion industry by 2024. And although this company is set up quite nicely with facilities, the appropriate licenses, and the partnerships to grow, this industry is still at its infant stage, with a lot of competition and unclear future in terms of profitability. The more established big US and Canada-only cannabis-based companies, Canopy Growth, Curaleaf, Kronos, and Aroa Cannabis, are all reporting significant revenue increases every year, with many of them being over 50% growth. However, all of them are currently running on operating losses. Cannabis is still at a very early stage, yet it is competitive. And even in New Zealand, there are already over 6 similar cannabis companies competing. So the question becomes, do you have enough faith in this industry and this small New Zealand company to invest in it? Let us know your thoughts on this company and the industry itself, and whether it's a buy or a sell for you. Hope you guys enjoyed this video of this stock, which is not yet listed on the NZX, but will be listed later on this month. Make sure to smash that like button and subscribe button if you haven't so already. We'll catch you next time.